Capital Energy presents Explaining Loans for the Solar Industry. In this video, we'll explain how solar loans work. When a customer chooses to purchase solar for their home, often coming out of pocket with cash is not an option. Up until a few years ago, solar finance companies didn't provide options that made a ton of sense for customers. Now, things have drastically changed. When looking for a loan for a customer, Capital Energy has three guiding principles that we adhere to make the loan a viable option for customers. Number one, we want to find the best interest rate in the market. It's no different than any other loan, really. The current prime rate for a conventional mortgage is 5.5%. Anytime you can find a rate the same or less than that, you have a pretty great product. Currently, we have loans with rates as low as 3.49%. That's pretty dang low. Number two, we want to find terms that make the most sense. Usually, that means varieties, so that customers can choose the loan that fits their lifestyle best. Currently, we have terms of 7, 10, 12, 15, 20, and even 25 years. Number three, we want to achieve what is called grid parity. Essentially, what that means is we want the solar loan payment to be equal or less than your average monthly utility bill, so we don't disrupt your current lifestyle. If you currently have an average electric bill of $150 per month, we want to find a loan payment that is $150 or less, with the shortest term and the cheapest interest rate possible. We can explain this a different way that may make a little more sense. If your electric company was to come to you and say, "Hey, we're going to take your current average bill and lock it in for 10 to 15 years. We won't ever raise the rate. Then, after 10 to 15 years, we'll stop charging you for power, but we'll still give you the power." Now, if they said that to you, would you do that deal? Yeah, that's what I thought. You may be wondering, how'd I get so lucky? Look, that's solar now. How is that possible? The federal government still provides a 30% tax credit for customers who go solar. The banks have come up with an interesting loan model to help customers take advantage and get solar now without having to bankroll it on their own. Let's say your solar system costs $30,000. Your federal tax credit would be 30% of that, or $9,000. Your solar loan would lend on the difference, or $21,000, and give you roughly 18 months to file your taxes, get your tax credit, and then transfer that credit back into the loan. This keeps your monthly payments the same during the duration of the term. Now, that fixed payment starts becoming an asset, instead of a never-ending liability that your current electric bill is. But what if you don't transfer the tax credit money and you use it for something else? How would that affect your loan payments? After the 18 months, your loan will re-amortize for the full 100% of the loan value, and your payments will reflect that amount. In our example, you'll be paying on the full $30,000 loan, and your interest rate will stay the same. One way to look at this is 3.49% interest rate on a loan is certainly cheaper than your credit cards. What you do with the tax credit is entirely up to you. Now, what if you want to pay off the solar loan early? Will you be penalized? Nope. Knock yourself out. Pay that off as fast as you want. There's nothing out of pocket, no lien on your home, and all the tax credits and benefits go to you. Ownership is hard to beat. Now, you may still have questions, so your Capital Energy consultant is a click away. Contact us to find out what your energy situation would look like owning your power instead of renting from your utility company.